Four stocks I'm buying now, September 2025 edition. Welcome in, folks. We're about to get into some growth stocks, value stocks, dividend stocks, some extraordinary opportunities out there I see in the market. You know we're getting to fall vibes because this morning I woke up, I drove the Plaid down to Starbucks and I got one of those little pumpkin drinks, because I was like feeling like I need some fall vibes, okay? It's been an extraordinary past 3 years. Congratulations to anybody that's been in this market the past 3 years. You've probably had a lot of fun. You've probably made a tremendous amount of money, right? What a climb it has been. From those lows we hit back in 2022, public count dipped just under $1 million to today pushing close to $4 million in the public count. Like, what a change, right? And we've had some drama along the way. We had the drama in 2023, the SVB bank whole situation, the regional banks, right? We had a severe correction early this year, right? Where the S&P 500 fell around 18% or so, peak to trough. NASDAQ was down about 22%, peak to trough. We had that whole drama, and that's what you have in the market. You have corrections, crashes, pullbacks, all those sorts of things over the years. It's, but you need to build a great portfolio. And I live in Vegas, and right outside Vegas, we have something called the Hoover Dam. Might be world famous, okay? And the Hoover Dam, they built that baby back in the 1930s. You don't see them having to reconstruct it every year or something like that, right? Oh, we got major problems with the Hoover Dam. No. They built that thing to last. A matter of fact, it's really fascinating, right? Basically, they did this kind of show in the past, right? And what if everybody in the world just disappeared? And they found that the Hoover Dam would likely end up being the structure that would survive the longest, which is rather fascinating. So let's build a portfolio as strong as the Hoover Dam. One thing only I need from you guys, and it's for you to just hit that thumbs up button, smash that thumbs up button. As the sign in my garage says, that's all I need from you guys. If you want to subscribe to the channel, if you enjoy my videos and you want to see more of my videos in the future, you can always subscribe here. The channel is free to do so. I appreciate y'all. Y'all that hit that thumbs up button, you guys are the best, okay? You make my day every single time. Now, for the people that see this video in the first 24 hours, it is out. It's a good time for you because the pinned comment down there today is going to be for the Labor Day sale. It is now ongoing. So everybody that gets to see this will be able to get my highest end Patreon tier that's usually $125 for $49. And that's not a teaser price, as in it's $49 the first month, then it jumps to $125. No. It's $49 a month and that's it. Okay, there's no it jumps to $125 after that. Nope, it stays $49. So that will be pinned comment down there. That's access to my #1 stock market course ever, Become a Master Stock Market, which is a $997 course. Also, you get access to see the stocks I'm buying and selling with screenshots each week for the Patreon portfolio. Also, you get access to the Discord chat. That is for the Patreon as well. That is not my private stock group, so don't confuse that with my private stock group. But this is a phenomenal step in the right direction. And the Become a Master Stock Market course, if you have not seen that course before, everybody should see that course over time. Step 1, in my opinion, you learn from me on YouTube. Step 2, you join my Patreon. You learn on a much deeper level. You get access to that Become a Master Stock Market course, right? And then step 3 is you join my private stock group. You get access to 1000xstocks.com, all that stuff. That's more of mastery level. You're super serious about the market. This is something you really, really want to do on a deep level. That's when you take things up to that level, okay? Already got it. So enjoy that. Pin comment down there to get it before the sale ends, okay? Alrighty, folks. Stock number 1 of these 4 stocks is a brand new stock, Whirlpool Corporation, WHR. Boy, has this stock been trash. The stock is down 43% the past 5 years. Just such a trash stock. I want to start a position in it in September, and I want to build out that position over the next, I would say, 3 to 6 months considerably. I view this stock as a buy anywhere in the $70 to $110 area. And I want to buy this stock all the way into the first quarter of 2026. Now, this is a multi-year play in regards to Whirlpool. This is not some short-term trade I want to play it for the next 6 months or 12 months. No. This is a multi-year, I think, pretty exciting cycle coming for Whirlpool that's going to be pretty much the opposite of what this company's gone through the past 5 years. We're going to have the inverse of this over the next, 3 to 5 years, in my opinion, essentially, okay? So, Whirlpool, boring business. Oh my gosh, okay? Refrigerators, ovens, dishwashers, washers, dryers, all this sort of stuff. What's the big deal? They own a bunch of different brands, by the way. It's not just a Whirlpool brand, but what's the big deal here? This is a boring business, I understand, but the gains will not be boring. The money made here over the next few years from 2026 to 2028, that will be anything but boring, in my personal opinion. There's going to be a lot of money to be made in the stock. I don't care, what a business does. Like, if there's a lot of money to be made, you could have the most boring business in the creation of mankind. And that's fine with me. That's fine with me. I mean, heck, Palantir, one of my best gaining stocks ever. What a boring business at the end of the day. It's exciting what they can do to help businesses, but at the end of the day, it's like more like a software type, SaaS type business, right? Heck, even Tesla, one of my best gainers ever, made 2,000% or so in Tesla, along with Palantir was another 2,000% plus gainer. At the end of the day, Tesla, how do they make all their money? They build automobiles. Like, how boring, right? So at the end of the day, we could look at all businesses and be like, oh, that's so boring. At the end of the day, all that matters is there money to be made or not, okay? No, Whirlpool right now trades at a market capitalization just over $5 billion. That's for the whole company, all the brands, everything, okay? Little over $5 billion. Now, Whirlpool's net income in the past, this is where things get really compelling here, in my opinion. Whirlpool's earnings over the past few years have been dumpster fire, okay? 2022 through 2025, dumpster fire for their net income, right? I do not believe that's lasting. I believe they're going to get back to their old net incomes. Now, what are their old net incomes? Their old net incomes, this company used to bring in $1 billion plus a year in net income, folks. Now, remember where that market cap's at right now. Everybody's pricing this company like they're never going to be able to get back there, and I 100% believe they are going to get back there over the next 3 years. The worst case scenario I see for Whirlpool over this next few years is them getting to somewhere where the company used to be in kind of like 2013 to 2016, where they were bringing in anywhere from about $600 million in net income a year to around $900 million of net income a year, okay? Now, this is why this is so significant, okay? Because when you look at this company, okay, what's going on here? You got to understand, existing home sales have been brutal the past 3 years. How brutal? We're talking, ladies and gentlemen, that home price sales have dropped and collapsed. Not dropped. They've collapsed to great financial crisis type numbers. You remember when we had the 1 in 100-year housing bust in the United States of America? That's how bad things have gotten in the United States when it comes to home sales. The only difference between this and the great financial crisis is the prices didn't collapse. The prices collapsed in the great financial crisis. Many markets went down 20, 30, some 40, some 50+% in regards to pricing. We haven't had that, but in terms of the amount of homes being sold, that's completely collapsed off a cliff. This is where we're at in the great financial crisis. This is where we're at right now. We're going through a great financial crisis in the housing market for the last several years, just without the price collapse. But in terms of people moving, now this is so significant because what happens when somebody moves? The chances they go buy a new refrigerator, washer, dryer, oven, microwave, blah, 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 all goes up exponentially. A lot of times if people are just staying in their same home, they don't end up going to buy that stuff unless it breaks. And they are forced to, I got to go get a new washer. My washer broke, right? My dryer broke. My refrigerator is not working right. Whatever, right? But that's when a lot of that happens. But the thing you got to understand about this is even more extreme. This great financial crisis 2.0 we've been going through in the housing market where home sales have just collapsed off a cliff. This is worse when it comes to existing home sales than what we face back here. Because you look at the numbers, you're like, okay, it's about the same. No, it's much worse. You know why? More people live in the United States now than back then. A lot more. How many more? Over 40 million more people live in the United States of America now than back in 2008 when we were going through the great financial crisis. Over 40 million more people. So when you look at this number, understand there was a lot less people living in the United States back here. So this is way more dramatic. This is way worse when it comes to just a complete collapse in existing home sales, right? And to kind of give you a little I want an AI to basically put me a picture together to illustrate 40 million people. But unfortunately, AI is, I guess, not advanced enough to do that. Or maybe the numbers is broski. It's too much. Okay, you can't do that. 40 million? No, I can't fit that in a picture, right? But to give you some reference of how insane of a number that is, right? The entire state of California has less than 40 million people, right? All those massive cities, in California, still less than 40 million people. The population of Canada is around 40 million people. So we basically have added, Canada in the United States just since the great financial crisis. That's insane, right? So the next question should be your brain should start putting things together and piecing things together, right? Your little AI brain here. Why am I confident that home sales will pick up over the next several years and get back to more normal territory, right? 2026 to 2028. Why will these home sale numbers not remain dead? Like, let's fast forward 3 years, 4 years in the future, and we're still just at these, insanely low ranges for existing home sales. Why am I confident it's going to come back to life and not remain dead? There's 3 parts to this. And all 3 of these I see playing out. All 3 don't need to play out, and I think there's still going to be a massive pickup. But if all 3 play out, we're going to have a massive increase in terms of amount of people moving over the next several years. Okay, part 1, the price shock everybody went through with, home prices in 2022 and 2023, right? Everybody's like, oh my gosh, homes are so expensive now. That goes bye-bye in 2026 through 2028. Whenever something happens where a price goes up a lot or something extreme happens, right? There's a price shock that comes along with that. And it lasts a little bit. And I took a picture of an iPhone here because when the iPhone came out, it was around $500 and everybody was in shock. $500 for an iPhone? That's insane. Now, no one even bats an eye and the iPhone sells for $1,000. The price shock went bye-bye, right? And that's just what happens when something's at a certain price for a certain amount of time. I mean, you could have even looked at home prices 10 years ago in 2015. And if you had been, used to home prices 10 years before that or something like that, or 20 years before that, you would have thought that was high. At the end of the day, the price shock goes bye-bye as years tick on, which helps people wrap their head around buying a new house, right? Part 2, we've seen weakness in regards to home prices, right? A lot of markets are seeing falling prices. A ton of markets in Florida, Texas, Arizona, Louisiana, Colorado, even some areas in California are seeing prices go down. Now, as prices weaken in a lot of these different markets, right? People start saying, okay, I like what I'm seeing here. It gets more realistic to be able to afford a home. If the prices come down, guess what? You're more incentivized to be like, you know what? Let's go ahead and move. Let's go ahead and buy a new house, right? So this is a huge component of this and I don't see this trend switching in the short term. If anything, I see continued weakness in a lot of these markets in the short term, right? Before they kind of bottom out and then, maybe slightly head up or stay flat for a while from there. No, I don't understand. A lot of people will ask, like, what's happening with Vegas, right? I live in Vegas. Why is Vegas not on the list? We know Vegas got hit the hardest of any. I don't think there's any home market in the United States of America that got hit worse than Vegas. Prices fell well over 50%. Why is Vegas not on this list of all these, basically states, cities that, we see home prices falling? You think you got to understand about Vegas, right? We have a few things working for us. The mountains surround the city. There's been such an increase in population, such a build out that we're at the end of the mountain ranges. My house, literally, what's right behind my house? It's not more houses. It's a big mountain hill, whatever we want to call it. You can't even build on it, okay? And so this is what's going on. And then you have all these Californians always moving here to Vegas, right? And you have no state income tax, which can attract even folks that are more toward retirement age, retirees. A lot of retirees love to move to Vegas all the time, right? People from across the country love to move to Vegas because they look at it as, hey, there's no state income tax there. If I can make the same amount of money, I'm going to have a lot more money in my pocket versus paying another 5% to some state you live in, right? So you always kind of have that. And that's why Vegas is, doesn't really see that weakness here. If you look at the population in Clark County, 2010, 1.9 million. Now we're up to about 2.4 million people roughly live in Vegas, right? And by 2040, 2.9 million are supposed to live here, which, their estimation might end up being low there, okay? Now, part three of this whole story, mortgage rates. We know 2 big factors come in when you think about the financial side of somebody moving. 2 big factors. What's the price of a home? What's the mortgage rates? We've already topped in regards to mortgage rates now at this point in time. And we are in a multi-year downtrend for basically mortgage rates, right? We were on a several-year uptrend for mortgage rates where that 2023 top. Now we're on a several-year downtrend. Now, if inflation remains, let's call it sleepy over the next few years, the Fed continues a lowering cycle, we're going to get these mortgage rates likely. I do not expect us to get down to these ranges we were in 2020, but I do expect us to get more into that 5% range, which would be a very healthy number where you get a ton of people moving. And I think we probably get there. My guess is in the next year, maybe year and a half. And so if that plays out there, that's pretty meaningful for a company like Whirlpool, for the housing market, to get people off their butts and moving, right? Now, Additionally here, the company has over $1 billion in cash and cash equivalents, right? So they can ride out the end of this little mess, and there's a mess short term, right? You have a lot of competitors have flooded the market before the tariffs with a lot of inventory. But I'm not investing in Whirlpool for their 2025 numbers. I don't care what they report next quarter. I don't care what they report the next quarter, because those are the next two 2025 quarters. I have 0%. Like, I'll look at the numbers. I'll still grade the income statement, balance sheet. I do not care at all what Whirlpool reports for numbers the next two quarters. They could miss by 1,000 miles, and it means nothing to me. Nothing. All that matters for me is what 2026 numbers look like, 2027, and 2028. That's why I'm investing in this stock. But they have plenty of cash to ride out the rest of this little short-term situation that's going on here for Whirlpool, okay? So my belief here in regards to Whirlpool is Whirlpool gets back to $1 billion plus of net income, 2026, 2028, right? If they do that, I think the company's going to a $10 billion plus valuation, which would put them at about a 10 PE or so. So let's call it, maybe they get a little over $1 billion of net income. Maybe they're at an 8 PE, somewhere around there roughly, right? 8 to 12, let's call it. Now, 8 to 12 PE is insanely low for the stock market. Insanely low, like ridiculously low. But understand a company like Whirlpool is never going to trade at some ridiculous high PE when they're in a major profit cycle. And the reason being is people understand the business is cyclical. So they might be able to do $1 billion or so of net income for 3 or 5 years straight. And then we have the next bust, and, Whirlpool all of a sudden is in a situation like they're in right now where they stop making nearly as much money, right? So you're never going to get a crazy PE on this. This is no Palantir where you're going to command a 450 PE ratio or something like that, okay? It's just not that sort of stock, and it doesn't need to be for me to double up my money, right? And so I view Palantir as I get a double up over the next few years. And then I'm in a situation where I can cash at that time, or I can hold it long term. Whatever way I want to play it is whatever way I want to play it. But I kind of look at Whirlpool as a double up opportunity here. Okay. Alrighty, guys. Next one up here. Stock number 2 of these 4 stocks is Google McDougal. So Google McDougal. This is one I started buying here recently in different portfolios, including in the public account. Public account, April 23rd, 2025, I bought 444 shares. I moved fast on those, and I'm glad I did, because I'm already up $25,000 on those Google shares I added there on April 23rd. You see an opportunity, you got to pounce. Now, I think it's very important I remind everybody what type of company Google is. This is a tech conglomerate. They own Google Search, which is used just as much as ever before, right? I use Google Search many times a day, every day. Many times a day, every day. They own YouTube. You're watching this likely on YouTube right now. Although I do release my videos on X as well. You could be watching on X, but more than likely you're watching on YouTube. Android. They own Waymo. They own a huge consumer cloud business and a huge corporate cloud business as well, which has been expanding very nicely over the last few years. Additionally, Gemini, right, in their AI products. They also have a big hardware business, and they own a bunch of other businesses as well, okay? That's just like the bulk of some of the most important ones there. Now, when it comes to Google McDougal, I posted this inside my private stock group here. It was a grade A income statement. Their revenue went to $96 billion plus from $84 billion. If you look at income from operations, it went to $31.2 million from $27.4 million the same quarter last year. Net income went to $28.1 billion from $23.6 billion. Diluted EPS went to $2.31 versus $1.89. Does not look like a company that is having their lunch eaten by ChatGPT or anybody like that. Looks like great numbers, and that's all Google has to do. Keep putting up the great numbers quarter in, quarter out, and all this fear about, ChatGPT is going to eat them, blah, blah, blah. It's all going to go away, right? Because at the end of the day, we see Google doing what? Increasing their revenues massively. I mean, they made almost $12 billion more in a 3-month span than the same quarter last year. The death of Google has been greatly exaggerated. Now, total cash equivalents, marketable securities on Google, $95 billion plus. Non-marketable securities, 52 plus billion versus 37 billion in the same quarter, or actually not even the same quarter last year. This was back in December 31, 2024. Look at how much the non-marketable securities has increased. If you look at shareholder equity, 362 billion versus at the end of last year, 325 billion. They're increasing that rapidly. And by the way, non-marketable securities, I basically look at it as long-term investments, is what I call it, okay? But usually it's kind of like assets that are on the balance sheet that you can't they're convertible to get out of, but it's not like you can get out of it tomorrow necessarily, right? Like a savings account or something like that. So non-marketable securities are investments such as U.S. savings bonds, private equity investments, certain government securities that are not traded on exchanges, have limited liquidity, meaning they cannot be easily bought or sold in the secondary market. So that's what differs versus, let's say, like a marketable security. Non-marketable securities are usually, the way I was taught in accounting way back in college is this kind of things that, might be more than like year plus investments, and these are like less than a year. That's the way my accounting instructor kind of put it the simplest way possible. Now, what about projections for Google? Because I have projections for Google. Okay, listen. We got a new beautiful feature on 1000xstocks.com where essentially you can now save your projections. So before you used to just be able to do a projection and that was it. Once you cleared the page, that was it. Now we allow you to save your projections, which is going to be a lifesaver for me because I end up creating so many projections for so many companies. So we launched this feature like a week or two ago. I've already saved up a few. Got a lot more to save over the next few months here. But I went to Google, brought that up, and here are my Google base case, bear case, and bull case for the stock and where I see the stock price going over the next few years. My base case for Google, and keep in mind, my base case is usually very conservative. I've been doing 10% revenue growth per year over the next few years from 2026 to 2029. And then doing 12% net income growth, not a crazy number at all, per year over the next 4 years, right? P/E ratio of 23 to 28, very fair number for a company like Google. That gives me a compound annual growth rate of about 15% on the low end and 20% on the high end. Easy peasy, lemon squeezy, give me the money, pleasey. Bear case, my bear case for Google has them doing only 7% revenue growth per year the next 4 years, okay? 8% revenue or net income growth per year for the next 4 years on average. That would still give me, even at a 20p on the low end, 25 on the high end, it would still give me a compound annual growth rate of 7% to 13%. I mean, if you're going to give me that on a bear case, I got to take that opportunity. Like, it's just too easy of money. Like, even in a bear case scenario, I'll probably outperform the S&P 500 because I'm not even convinced, we can call that a midpoint of 10% CAGR. I'm not even convinced the S&P 500 will give a 10% CAGR from 2026 to 2029. I'm not convinced at all. And so the fact that I could get that from Google in a bear case, I got to buy the stock. I don't know what else to say, right? That's why you see me buying the stock almost every week right now. As far as a bull case for Google McDougal, I have them doing 12% revenue growth per year on average, 2026 to 2029. Net income growth of 15% on average. 25 to 30 P/E ratio for a company growing, low to mid double digits on top line, bottom line. It gives me a CAGR of 20% low end, 26% high end. I got to buy it. You know what I mean? Like Google, it's just money, man. It's just money. Do you want to make easy money? Do you not want to make easy money? You tell me. What do you like to make? I don't know. I like to make easy money, man. So, all right, next one up here. Number 3 of these 4 stocks. I made hard money before, and I like easy money a whole lot better, okay? Stock number 3 of these 4 stocks. I love this stock. I so love this stock. This stock is represents one of the most perfect companies in the stock market, in my opinion, of really giving you an extraordinary growth opportunity where this company has really this next company we're about to get into, they have the next 10 years of growth set up for this company. Not the next 10 months, not the next 10 quarters, the next 10 years of growth set up for this company. It's a great value stock. It's a great dividend stock. And they've had the worst situations you could ever imagine thrown at this company over the past 5 years. 2 of the worst situations you could ever imagine being thrown at this company got thrown at it in the past 5 years. And yet this company has emerged stronger, not weaker, stronger than it's ever been at any point in this company's history. It's a very, very beautiful company. And that is Cheesecake Factory. Oh my goodness, do I love this stock. It has performed very well over the past 5 years, up 162%. That does not include all the dividends also this company has paid out, but it's been a drama show for this company over the past 5 years, right? But here's the deal with cake. You got to understand, this is one of the most miraculous companies, I think, in the market. They've had 2 of the worst situations you could ever imagine thrown at this company in the past 5 years, right? They had to go through a once in 100 year shutdowns back in Rona, right? Where the restaurants were forced to be shut down. And then when they were finally allowed to be open again after being closed for a long time, what happened? They were only allowed to have limited options, limited seating at their restaurants. You know, to do all oh, you can't get too close to this person, so this table needs to be like way over. Like, what a disaster, right? Like, and a lot of restaurants didn't make it. A lot of restaurants did not make it through that. A lot went under, went out of business forever. They closed their doors and that was it, right? Then, what happens 2 years later? We go through the highest inflation in the United States of America that we've gone through in decades. Decades, as in like 4 or 5 decades. Incredible inflation. And that devastated so many restaurants because so many restaurants were not able to essentially pay the workers what the workers started demanding for wages. And then they had to start paying crazy prices for like a tomato and beef and chicken and all this stuff. Like pricing just went insane, and eggs. And so a lot of restaurants could not make it through that inflation cycle we had to go through, right? And so if you got through that, if you got through those two disasters for the restaurant industry, and ask anybody that's run a restaurant in the past 5 years, they'll tell you, brutal. What a brutal time. I mean, restaurant business is always brutal, but this has been an exceptionally brutal time period the past 5 years. If you made it through this, you're strong. The company's stronger than it's ever been on a financial front. You look at the income statement, you look at the money starting to pour in, you look at the balance sheet, you look at how well positioned the company is, you look at the stock price, it's never been stronger than it is. And it had 2 disasters thrown at it in a 5-year span, right? Now, when it comes to Cake, this is a 6-prong investment, I call it. Okay, where there's like 6 prongs to this one that make it such a compelling buy now. It was a buy yesterday, it was a buy the month before, it was a buy last year, it was a buy the year before, it's a buy next year. 6 prongs here. Prong number 1 is the Cheesecake Factory itself. Like, that's an ATM machine of a business model. They're packed all the time. They do crazy numbers, right? It's, one of the greatest restaurants in the history of mankind in terms of just being able to make incredible money per restaurant open. Like, it's ridiculous. You can look at the unit volumes Cheesecake Factory restaurants do. It's ridiculous. It's insane, okay? That's prong number 1, ATM machine. Prong number 2 is North Italia. North Italia is really going to fill a void over this next, I would say, several decades, essentially, in the United States of America, like Olive Garden kind of filled in the last few years. Or not, I should say last few years, last few decades. Olive Garden expanded across the United States of America. They filled a void of like an Italian restaurant. And nowadays, people realize like Olive Garden quality of food is not very good, right? The restaurants look super outdated. It's not like it was, 20, 30, 40 years ago, right? So North Italia is coming in to really fill this void with much higher quality food, like not even remotely close. Like Olive Garden's, if you've eaten good Italian food, Olive Garden's a tough eat, right? North Italia is coming in with great food. They're coming in with restaurants that actually look amazing. That actually, like, if you're somebody that has some taste in terms of like going somewhere, like you're like, oh, this is a nice place. This is a classy place, right? And still coming in with a price point that's not just like, oh, only rich people can go there or something like that. So that's coming in. That's just massive expansion. We're going to see, you're going to see multiple locations in pretty much every big city within the next 5 years for North Italia. Okay. Prong 3, Flower Child. This is an insane concept. This is the most exciting thing, I think, in the whole company. This is more exciting than North Italia. This is more exciting than the Cheesecake Factory itself. Flower Child, we have an opportunity with Flower Child to expand this to locations. Like, you could have more Flower Childs than you have in total restaurants if you combined all the other brands 10 years from now. When I think about Flower Child, this is a perfect concept for really this next 10, 20 years. And the reason being is Flower Child is a concept that really focuses on healthy food. You don't have a waiter or waitress type experience that is very different from like a North Italia, like a Cheesecake Factory. You just go up there, you look at the menu, say, oh, I want the global and, with shrimp or something, whatever you want to get, right? And they make it for you. It's very high quality. They fresh make it for you. It's delicious. And they bring it out to your table or you get it to go. Also, it's capitalizing on the whole to-go business. From my understanding right now, they have an exclusive relationship with DoorDash only, from my understanding. But I wouldn't be surprised if 5-10 years out there on all the different, food operators platforms. And that's just a crazy opportunity, right? Because if I think about all that Uber Eats, DoorDash, all the food delivery, like that's just going to continue to get bigger and bigger. And it's a perfect concept that can work in the suburbs. It can also work in the office environment and corporate areas where you're doing big lunch volumes, big breakfast volumes, right? Or maybe people after they get off work. So Flower Child works just about anywhere. So I love that one. By the way, I had to mention this because at the exact time I was doing this screenshot of Flower Child, a classic came on. A classic. You're a Flower Child. Like it was crazy timing. And I'm like, oh my gosh, like I got to record this, right? I mean, I got to take a photo of this. Like, this is ridiculous that the fact that I happen to be taking a Flower Child screenshot and Flower Child came on in a song. I'm like, that's like, what are the chances of that, man? That's crazy. Prong number four, when it comes to this investment in Cheesecake Factory is around Fox restaurant concepts. This is something they own. They own a ton of different brands here: Culinary Dropout, Blanco, the Henry Doughbird. Obviously, we already spoke about Flower Child, Flyby, all these different brands, right? I love Olive and Ivy. No, this acquisition Cheesecake went through, this is what, Facebook buying Instagram, what that meant for that business is what this deal will end up meaning in the end, in my opinion, for Cheesecake Factory, okay? And so they did this deal back in 2019. Then obviously we went through Rona in 2020. Everybody forgot about it. It's one of the most magical deals ever. They were able to get the Fox restaurant concepts from a gentleman named Sam Fox. I think this is a legendary restaurateur. I think he's, one of the most amazing, at least, in the United States of America, one of the most amazing restaurateurs in the United States. Okay, what else am I gonna say? Like, dude's a legend. Like, you can if you ever want to do some research on Sam Fox, who he is, what his deal was and whatnot, you can do it. There's been plenty of articles written about him over time. The man's very exceptional when it comes to the restaurant industry. And I've been to so many of his restaurants, which once again are all owned by Cake now, and I'm nothing but insanely impressed. Like, ridiculously impressed. And believe me, Cake wouldn't have done this deal unless they were like, dang, he's got something special here. And from my understanding, Sam Fox just didn't want to try to grow this into a massive company like a Cheesecake Factory or a Texas Roadhouse or something like that, right? And so he handed off. He got a crazy 9-figure exit from it. Good for him. And he said, Cake, you can take it from here. And I don't know, he might have Cake shares. I hope he does. I would love to see him prosper from Cake over the years as well. I don't know if he does have Cake shares, but I hope he does, because, his concepts are going to come in clutch over this next decade, okay? Now, in terms of Cake, prong 5 of why this is such a great investment is really around valuation. Forward P on this one, 17, 2-year forward P 14, way too low. For a company that's got the next 10 plus years of growth ahead, way too low. Way too low. That shows me people still don't understand this. The forward P on the stock should easily be in the 20s or 25s right now, okay? Prong number 6 when it comes to Cake is dividends. This was just paid out to me in the public account here a few days ago. Cheesecake paid me $868 in dividends there. They pay their dividends every 3 months. There's another portfolio of mine. They paid me $459 dividends. I own Cake in other portfolios as well. So you add it all up, and I made a lot of money just in dividends in the last 3 months. And that's great. I love making that dividend money, because then you know what I do with the dividend money? I go buy more stocks with it. Sometimes it's other dividend payers. Sometimes it's growth companies. It's a beautiful thing. Okay. So Cake, love that one. Number 4 of these 4. Oh, actually, no. Excuse me. Hold your horses for just 1 minute. I got to do honorable mentions. There's a couple honorable mentions I got to mention before we get to stock number 4, and that is Adobe. ADB, honorable mention here today. Stock's done trash the past 5 years. I think it's going to do very well for itself over the next 5 years. And so Adobe's a stock I started buying here somewhat recently, and I might want to buy some more shares. So honorable mention with Adobe. Another honorable mention is Nike. I love Nike as a buy the last few months. The stock's already bottomed. It's heading up from here. I think Nike's got a great next 3 to 5 years ahead of this company. We're going to see a lot of an inverse of this chart basically over the next 5 years, in my opinion, for Nike. Okay. Alrighty, now we can get into stock number 4, and that is Fubo TV. Fubo TV, $3.53 stock here today. It should not be there. Stock's up about 69% in the past year. Now, Fubo, very exciting news just came out a few days ago in regards to this. Fubo TV is launching Fubo Sports, a skinny bundle. It's supposed to launch on September 2nd. Now, what do you get with this package? The package is going to be around $55 or so. You're going to get ABC, CBS, Fox-owned and operated stations. Plus, you're going to get ESPN, ESPN2, ESPN News, ESPNU, ACC Network, Big Ten Network, CBS Sports Network, Fox News, FS1, FS2, the Fubo Sports Network, ION, NFL Network, SEC Network, and the Tennis Channel. Now, this is a big deal. You're going to get, there's potentially some other stuff as well. But, this is a good package for I would say an average sports fan. If you're really, really crazy about sports, there might be a few things that you don't quite get in that package that you might end up opting for a package like I have, which I think I pay like $100 a month or maybe a little over $100 a month for Fubo. But like this is going to cover a lot of people. And so a lot of people will be very interested in this and likely end up signing up for a product like this, right? Now, they're going to do this like kind of like tester price where essentially the first month is going to be $45 and then after that it goes to $55. I'm not a huge fan of this. Maybe some people are like, oh, cool, I get it for a discount the first month. You know, I just wish, like, if it's $55, just say it's $55 and just leave it at that, man. You know, take it or leave it, right? And so, you know, it's like what we're doing with the Patreon sale. It's not like I'm like, oh, it's $49 the first month and then it goes to $125. No, it's $49 after that as well. It's not like, you know, it doesn't jump up. So, but it's this day and age. I guess people do this, but whatever. That's the you know, deal with the pricing there. No, for Fubo, the fundamentals of this company have changed, I mean, to a ridiculous extent. If you look at adjusted EBITDA, right, which adjusted EBITDA factors in things like depreciation, amortization, stock-based compensation, a lot of these like non-cash expenses and whatnot, right, or one-off expenses like litigation, transaction expense because they got a big Hulu deal that's going through right now. That's a bunch of one-offs in non-cash expenses. So when you adjusted EBITDA was $20 million plus. If you look at this same quarter last year, right, adjusted EBITDA was negative $10.9 million. So we've had a complete flip in the profitability of this business model. Now, the company's sacrificing revenue growth right now, right? If you look at revenue growth, there's no growth in revenue right now. And the reason being, in my opinion, is because the Hulu deal should be going through very soon, right? So Fubo's supposed to get essentially the live TV portion of Hulu, right? Fubo's supposed to get that. So that deal's supposed to go through. You got the skinny bundle, which is going to be launched here very soon, and that's going to have a full year of launch in 2026 and a full year of marketing behind it in 2026. Revenue should boom for the company in 2026. So in my opinion, you basically sacrifice revenue growth right now because you're going to have so much revenue growth, you're not going to know what to do with it next year, right? Now, if you look here, they're sacrificing that and they've improved their profitability immensely. Look at this. You went from an operating loss in this same quarter last year, $35.6 million. Operating loss in this quarter, $5.9 million. What a recovery. Oh my gosh, one for the history books. Now, additionally, look at cash and cash equivalents for the company. Up to $283 million in cash and cash equivalents. Do keep in mind, from what I remember, on the legal front, if for any reason the Hulu live TV deal doesn't go through, let's say the courts block it or something like that, from what I remember, the company is supposed to get 9 figures. If the deal doesn't go through, now I hope that deal goes through, I'd love it to go through, but if it doesn't, from what I remember, the company's supposed to get 9 figures. Keep that in mind. So that would just build the cash extent to even a much higher level. So the way I view Fubo is, you guys remember when DirecTV and Dish Network were really in their heyday, right? Which was kind of like the mid-2010s. And I view YouTube TV and Fubo as kind of that Dish Network DirecTV where, YouTube TV is going to continue to be the biggest, right? And Fubo is always going to be that competitor behind them. That's always, smaller, but still very, very successful. And so when I look at Fubo, I think it's kind of a joke the stock's $3.53 today. This stock should not be anywhere near the Gulag. If you don't know the Gulag, that's stocks that are priced under $5. It should not be there. This stock should be over $5 right now. Look at the balance sheet of this company. Look at the skinny bundle coming here. Look at the Hulu deal that's supposed to go through here, right? There's no reason the stock should be priced where it is right now, and it is, and I think it's a mistake. I think the stock should be well over $5 right now. And then, if they get back to very nice revenue growth next year, we could be talking about a stock that goes double digits next year, $10 plus. We'll see how it all shakes out. But I like Fubo. I like Fubo a whole lot, okay? Appreciate y'all for joining me as always. Thanks so much for being here. For the people that are viewing this video in the first 24 hours, that Patreon sale for my highest end Patreon tier will be going on. $49 access instead of $125 usual access. That will be pinned comment down there to get that deal. Enjoy that. Enjoy that. Enjoy that. For the people that are not watching this, within that first 24 hours, this video coming out, and let's say you want to apply to join my private stock group, get access to 1000xstocks.com, all that. Check out the description area down there. There's a link in the description. You can click on that. You can fill out that and see if you can join us in the private stock group, get access to 1000x and all that good stuff, okay? But for everybody getting that Patreon sale, enjoy it, okay? Much love and have a great day.